The credit crisis of 1772 is recognized to be one of the most devastating financial crises of modern times. Its relevance is significant, since it was the first modern global financial crisis. Credit played a central role in this widespread contagion. Starting from London, the effects of this financial shock spread to Scotland, the Netherlands, other parts of Europe, and without excluding the British American colonies. Firstly, let's talk about why this crisis keeps being particularly relevant today. The action of the Bank of England to limit the shock constitutes an early instance of the lender of last resort, 30 years before the formulation of the concept. A lender of last resort is the person you turn to when you urgently need funds, usually in periods of financial distress. Today, this role is played by the central banks that give stability to the system. In 1772, the lender of last resort was the Bank of England that intervened to contain financial contagion. Another reason is narrow banking. A narrow bank is a bank that guarantees deposits by investing 100% of them in assets that have little or no credit risk, like short-term treasury bills. Banks can still make loans, but that capital is not raised by depositors but by investors willing to take on the uninsured risks. Supporters of narrow banking believe that the lender of last resort policies and the deposit insurance are primary causes of financial instability, encouraging banks to take on excessive risks. One argument against narrow banking is that the credit crisis of 1772 took place even though, in the financial system of the time, deposits were not insured. Non-bank financial institutions triggered the crisis and authorities felt compelled to rescue them. After Great Britain won the 7 Years' War in 1763, the British economy lived a period of great expansion. To be precise, an uncontrolled growth, characterized by excessively ambitious projects and imprudent monetary expansion. Scotland had an important role in this context. Scotland saw an expansionary phase that peaked just before 1772. The Scots increased their wealth, certainly through increased relevance in the tobacco trade. They had a cost advantage. The business models of the tobacco trade were two. The first business model is the older plantation or consignment system, particularly frequent among London traders. The planter shipped the tobacco to the British merchant, who unloaded the tobacco, paid the duties, and sold the commodity in Europe. The merchant, in turn, shipped to the planter the consumer goods he requested. It's important to note that it's the planter that keeps the property of the tobacco, as the merchant acts only as an agent. He receives a commission based on gross sales, while the planter assumes the risks and costs of transportation. Usually the price of the tobacco shipped was lower than that of the European goods, so the planter almost always was in a position of structural debt versus the British counterpart. The merchant charged the difference. It was a debt without interest for 12 months and thereafter at 5% of the unpaid balance. Then we have the newer system, or the commercial or store-based system. This system was particularly relevant among Glasgow traders. The Glasgow traders set up stores in the colonies where they purchased tobacco and sold to the planters European goods on credit. In this system, the ownership of the tobacco passed directly to the store that assumed all the costs of transportation to Europe and of insurance. As in the plantation system, the planters were indebted to the British counterparts. The commercial system was characterized by frequent small-sized debts, while in the plantation system the balances were larger. The commercial system became popular. By 1775, over 3/4 of the tobacco in Virginia were traded under this system. This increase in popularity can be explained by the faster turnaround times of Scottish ships, given that the route to Glasgow was shorter by 4 to 6 weeks, and was also immune to hostile action in case of war. The Scots had their people in the American stores, so the organization of the trips was certainly made easier too. In 1772, Alexander Fordyce shorted the East India Company stock. This bet proved to be incredibly wrong. Fordyce speculated away the bank Fordyce speculated away the bank's resources. To avoid the payment of debts, he escaped to France. The London banking house of Neil James Fordyce and Down collapsed in 1772, giving birth to the disaster. The bankruptcy shocked the economy of England. People's confidence in the banking system was at the lowest point. Crowds of creditors ran to the banks to request debt repayment or to withdraw cash deposits. In less than 1 month since the crisis, 20 banking houses declared bankruptcy. The Ayr Bank, that was strongly connected to the Fordyce Bank from a financial standpoint, dissolved too. The Ayr Bank was a Scottish bank that opened in 1769, just to dissolve a few years later during the credit crisis. It supported the colonial trades and was criticized for giving credit way too easily. To sustain its excessive expenditures, it relied on short-term money market loans from London, particularly the Neil James Fordyce and Down banking house. The imprudent risks this bank took were not isolated. At that time, the exuberance regarding colonial trade was pervasive. During the same period, tobacco prices declined, hurting large planters. Their business had high fixed costs. For this reason, they needed ulterior credit to meet their recurring charges, but credit was not available anymore. There was a violent break in the business model that, for the previous years, attracted notable investments. All tobacco merchants, consignment or store-based, depended on the City of London for effecting their fund transfers. International trade was based on the Bill of Exchange. It allowed to transfer funds without moving cash. The demand for London bills went significantly high, but this system introduced a new dimension of risk, particularly credit risk. There had to be the confidence that the London or Scottish banker who accepted the bill could respect the duty. In short, people had to trust the banking system. In Scotland, the consequences of the crisis were serious. The Netherlands too were hit. Clifford & Co., a banking firm in Amsterdam, declared bankruptcy in the same year, in 1772, as it engaged in the plantation business as well. Consequences were felt a little later also in Stockholm and St. Petersburg. A few banks closed also there, and obviously the crisis hit heavily the 13 British colonies, especially the southern ones. This is the end of the video. Below in the description you can read the sources I studied. Thank you for your attention, and if you wish to view the next videos I will post, I encourage you to subscribe to the channel.